Okay. Good evening, everybody. I hope all of you are fine. Today there is no Visarjan as such, so I think it will be a peaceful lecture. Okay. So let's start quickly, guys. I think this forex is getting too much now, kind of as if it is not getting over only. So we really need to be like finishing this topic as much possible, right? No? Good evening. Nobody came today. There are only two people I can see. Oh, people have come. Okay, fine. So guys, let us start. Let us start this. Okay. So we were trying to do question number 16 yesterday. Okay. So what does the question number 16 say? Yes, Viru. Good evening. Mr. Mamin. Hi Priyanka. Hi Jyoti. Mr. Mamin, an Indian investor, invest in a listed bond in USA. If the price of the bond at the beginning of the year is USD 100 and it's USD 103 at the end of the year, the coupon rate is 3% payable annually. Okay. So by that calculation, guys, it is like if you compute the return of this bond, then it should be 100 plus 3% coupon. Basically, you can write down 3 as coupon and 103 minus 100 by 100, it will give you the return. I hope that is fine with you. You will take some 5 minutes to connect with me because there has been a gap since yesterday. And the timing has also changed. So usually when you have lectures in the evening, it is relatively like your brain gets used to the time. So it's an odd time for you. That is why. So find the return on investment in terms of home currency if USD is flat. So if I calculate the return, it will be 3 plus 103 minus 100 divided by 100 into 100. So even without calculating, you can say 6%. So tell me one thing, all of you, if the exchange rate does not change, for example, the Indian person is investing money in US, okay? So this is the bond, it will give a return of 6%. Tell me one thing, if there is no change in the rupee dollar value, the spot value and the maturity value, then what will be the return for Mr. Memin? Can anybody answer me, please? I am saying that if suppose the bond is yielding a return of 6%, you can see how did I calculate that, right? Now that they are saying find the return on investment in terms of home country currency if USD is flat, it has to be 6% only. Suppose if you converted rupee into dollar at 50 and you bring the money back at 50 only, so you are going to earn only 6%, no change. I'm sure you understand that part, right? Then if USD appreciates during the year by 3%, correct, very good. So if USD appreciates during the year by 3%, so I am wanting to say, guys, is that if USD appreciates, it is good, no, for Mr. Foreign currency should appreciate only. So what will be the return? 1.06, okay, then 1.03 minus 1 and into 100 will be your answer. And that gives me 9.18% answer. Okay, then USD depreciates during the year by 3%. So 1.06, okay, then 1 minus 3% minus 1 into 100. So 1 minus 3%, okay, into 1.06 minus 1 into 100 will give you 2.82%. Okay, now 2.82%. Yeah. Now they say Indian rupee appreciates during the year by 5%. Very, very careful. Why? If Indian rupee appreciates, that means it is going to create a loss for you. Correct. Very good. So if Indian rupee appreciates, that also means that dollar will depreciate. Tell me one thing, I taught you yesterday only. Guys, I'll go slow. I'm sure you are fine with that, right? I'll not rush off because it has been back-to-back lecture since 6:30 in the morning today. Okay, so please allow me to be like comfortable and like that. So after 2 hours, we can take a small break of 15 minutes and we can start again for 1 hour maybe if you are ready to sit. So that because yesterday, tomorrow again we will have a surgeon and a big surgeon actually. No, tomorrow we will not have a surgeon. We will have now Visarjan on Thursday. Okay, so let us see. I'll just tell you the schedule on the group. Let's not waste time discussing all this here. So Indian rupee appreciates during the year by 5%. So tell me one thing. That means rupee will be at a premium of 5%. Okay, that is a loss to us because rupee appreciating means, you know what does it mean? Rupee appreciating means foreign currency depreciating. And in order to earn a higher return, your dollar should appreciate and not depreciate. So if rupee appreciates, dollar depreciates, that is not a good news for us. But I'm not wanting to ask you that because I understand that you should be knowing by now because we've discussed enough this point. What I'm wanting you to ask is that if uh, okay, if rupee is at a premium of 5, do you think that dollar will be at a discount of exactly 5? You did premium on rupee, premium on dollar and something like that, right? You tell me one thing, if rupee is at a premium of 5, technically, okay, will the discount on dollar be the same? What do you think? Will the discount on dollar would be the same? Not by same percentage, slightly lower. Premium will be always relatively higher. The discount percentage will always be slightly lower, but then in the question, guys, they have not considered that part. So it will be 1.06.95 they have taken. It should not be 0.95, but it is okay. We can't help because what do they say now? Look at this. Can you see? Conceptually it is not wrong, technically it is wrong. Conceptually it is not wrong. So rupee appreciate means dollar depreciate by 5%. Be very careful about this step. I told you yesterday only that this question is a very important question from exam point of view. These all questions whichever like you see. Then the last question is that Indian rupee appreciates during the year. Okay, will your answer differ if Mr. Memon invest in the bond just before the interest is payable? No, I don't think so. No, our answer will not differ even if Mr. Amen invest in the bond just before the interest is payable. No, it doesn't matter at all. So now the next question that is going to come up or next topic in front of you is going to come up is short-term cash management in multinational corporation. Okay. So what is the topic all about? The topic is, guys, basically that it is about a subsidiary and an MNC. This whole concept is based on the subsidiary and MNC. So how does it work? So guys, suppose you imagine that there is a headquarter of Citibank in US, okay, and there are subsidiaries in India, then Bangladesh and Pakistan and everything. There are, okay. So in that situation, just tell me one thing, guys, that kind of, if you ask me, there are two ways of managing cash. One is called decentralized cash management system and the another one is called centralized cash management system, okay. So in the decentralized cash, see, when I say managing cash, it only means managing the surpluses and the deficits actually. If you have cash which is to the extent of appropriate level, then there is no problem at all, correct? But if you have cash surplus or if you have deficit, then there is a problem. So what I'm wanting to tell you here is that if you are trying to manage cash, okay, that there are two methods they can allow their subsidiaries to operate. Number one, decentralized cash management system means they will tell their subsidiaries that whatever surplus or deficit you have, please try to manage locally. Means if you have a surplus, please invest locally. If you have a deficit, please borrow locally only. We would not get involved. And when I say short term, it has to be 1 month, 2 months, 6 months, something like that. Okay. In centralized cash management system, it doesn't happen like that. If you have a surplus, send that cash immediately to the HO. Okay. And if you have a deficit, borrow from the HO. The only thing that I need to tell you at this point of time is that, and rather I would want to ask you that, tell me one thing. So if suppose, like kind of, what do you say? in the decentralized cash management system, there is no actual conversion happening, right? But if I give you two situations wherein I say that please compare the two answers, okay? So in the centralized cash management system, all the money would be converted in real terms because they have to go to HO. But the money is not being converted in the decentralized, but still I have to convert. Why? Because guys, if you do not convert the decentralized, how will you compare that answer with the centralized? That means in the decentralized, there is only a notional conversion. It is not an actual conversion, okay? So let's read the sum. Correct, correct. Suppose you are a treasurer of XYZ, okay, in UK. Correct. Suppose you are a treasurer of XYZ PLC in the UK. XYZ have two overseas subsidiaries, one based in Amsterdam and one in Switzerland. The Dutch subsidiary has surplus euros in the amount of 7,25,000. Just look at that, suppose you are a treasurer of XYZ PLC in the UK. XYZ have two, okay. So the home currency is pound basically, correct? Two subsidiaries, one is Amsterdam. I'm just looking for the currencies actually. So Amsterdam will have a currency of euro. This will be CHF and this will be pound. So pound is the home currency and CHF and euros are the foreign currencies. The Dutch subsidiary has surplus euros in the amount of 7,25,000. Okay. What is Dutch, Dutch is basically Holland, Netherlands, Amsterdam. It is one and the same. The Dutch subsidiary has surplus euros in the amount of 7,25,000. It does not need for the next 3 months, but which will be needed in the end of the 91 days. The Swiss subsidiary has a surplus of Swiss franc 998,077 that again it will need on day 91. The XYZ PLC in UK has a net balance of 75,000 pounds that is not needed for the foreseeable future. Given the rates below, what is the advantage of swapping euros and Swiss franc into sterling? So basically, what is the question all about that I tell you. So UK is my home currency. UK is the HO currency basically. UK is the HO, not currency. Pound is the home currency. Okay. And you have two subsidiaries. One subsidiary is in like what? One subsidiary is in, means you have surplus in euro and you have surplus in CHF because you have two subsidiaries. Okay. So the question is saying that, and your pound is also surplus. So basically all of the three are in surplus. So you have to compute two answers. One answer would be that you will allow each one of them to convert their amounts immediately into pound, take a total and invest in pound only. Okay. So that you get one answer. That is centralized cash management system. The another one will be that you will invest in their respective currencies. Okay. And what is the period? 91 days. After 91 days, just for the sake of conversion, you will use a 91-day forward, okay, to convert those values, take a total again and then compare both. Is it fine, all of you? So the only thing that you might need to do is changing the way they have given it. Okay. So can I write here? So pound per euro is 0.6858 and 0.6869. Okay, then 91 days pound per euro will be, it is low high guys, so 0.6858 plus 0.0037. okay, I get 0.6895. okay, and then you have 0.6869 and plus 0.004, that gives me 0.6909, correct now? Okay, okay, fine. So then again you have here spot pound per CHF I get. Okay, that will be 2.3295, okay, and 2.3326. okay, then 91 days pound per CHF will be 2 point, no, I don't want to write that, 2.3295. Okay, this is high low. If you see, this is high low, so minus 0.02, and you know what, you will fail to register that, you will definitely fail to register that part. Okay, and 2.3326, then I'm just doing so that you can just check out on the rates that how are we. 3098, yes, thank you, thank you. Okay, so these are the basic, these are the rates basically. So what I understand is that I need to have a pairing with pound with euro and pound with CHF, which is given to us. So that means to say we don't have to compute a cross currency, guys. That is easy actually. The only thing is that, yeah, I mean, and the rates are direct only because the company is in UK. Okay, the company is in UK and pound is on the left hand side for both the set of rates. So these quotations are also direct quotations. So these are the slabs of the rates actually. Now look at that, Dutch subsidiary, surplus 7,25,000. This euro 7,25,000, what are they doing here? Okay, they are saying if they are invested locally. Say they calculated the same thing what we did. We have already done, kind of there only. If the surplus is invested locally, 7,25,000 euro. So if you see the slab of the euro, 7,25,000 for, it will be, the rate applicable will be 2%. Look at this. So 7,25,000, can you see that? Okay, and you get this. Now, I have written a word here, equivalent. What does that mean? It means that actual conversion is not happening there. It is just for the sake of it. So basically guys, you will sell euros and buy pound. After forward rate, not the spot rate, I mean to say. This rate, okay, actually, okay, this rate. So, so 91 days pound per euro. So sell euros and buy pound. I can sell euros actually, right? Is the rate 0.6895 applicable to all of you guys? So you'll convert that amount, 6.6895. Look at this. Yeah, you can multiply. Yes, 0.6895 is the correct rate, and you can, this is one answer. Now similarly, you will convert the CHF. You will first invest in the local market at the rate of, guys, look at the amount, okay? So the slab is not behaving like an income tax rate, okay, 30% and 20%, and no, for the total that amount, that particular rate is applicable. Okay, I hope you understand that. It is doesn't behave like a income tax slab or something. So 0.5%, they are talking about the CHF rate. So that means to say this rate, 0.5%. Okay, so first they will invest, okay, and the money would be converted into pounds at a forward rate. You know how to. Now you will total this and this. Not only this, you will also add up the invested value of pound. You will bring all the three money together and take a total to know that if we invest locally, then what should be the total cash flows at the end of the 91 days. Do you agree, guys, all of you? You want to know that what will be the value of cash flows at the end of the 91 days. Did you understand, all of you? So basically what did you do? You invested in your home currency rates, okay, in euro was invested in euro, pound in pound, okay, and one more, CHF in CHF, okay. Your answer has to be in home currency, the HO currency, not the home currency, correct? So you convert your euro invested value and your CHF invested value at 91 days forward to get pounds and take a total. That's what we are doing. But here in the centralized cash management system or immediate swapping, you'll see that they are not invested. They will be first converted on the spot in pounds, again converted into pounds here, and take a total of all the three. Okay, take a total of and this one. So the total is this one. Okay, and then you invest at the rate of 5.375% for 91 days. So basically you get the answer this, and whichever is higher, that will be your right answer. Guys, have you been able to understand? It's a very easy sum, but then it is a very very obvious sum to be asked in the paper. That's what I feel. Very obvious sum actually. So next very important topic that we have to start is fate of the forward contracts. Are you fine, all of you? Correct, na? After some. Okay, now fate of the forward contracts. Fine. So basically, guys, whenever you enter into a forward contract, okay, when you enter into the forward contract, I mean, I think hardly anybody is attending live. Correct, no, guys? There are only 4 people out there, imagine. Yeah, there has been a lot of this thing actually. Lot of lectures since morning. So let me start. Let me, what we can do, we can finish fate of forward contract, then I can take a break. Okay, then we can start again in some time. Does it work? Yeah, it is a afternoon time. That is why I feel that people are not there. That is why I put on the group that Visarjan thing is not there today. So evenings are better actually in a way. Evenings are better actually because people, I mean, even if you have not rested in the afternoon, evening you feel better. But the afternoons are like, and all the more if you're tired, you know, I slept only 4 hours yesterday night. That is why. So, but let us finish a portion, guys. We cannot daily on a daily basis. We can't do. It's okay. I'll manage myself. Don't worry. Okay, let's, because see, if we finish fate of forward contracts, we take a break of maybe half an hour, maybe. So I would be relaxed to the part that okay, my this portion is over. I have to just finish 1 more hour. So I, that would be very comfortable for me because the portion is there, guys. Like not very less portion is pending, and that's why I'm like a bit thinking also that this one question number one, then two, and then we have. I will not take too much of time in this topic. That's what I think. So up to question number 23, it is about cancellation and cancellation only and extension only. So up to 23. So after that, we are left with Nostro account mostly, right? So 10 pages. So maybe after this teaching you this part, I will take a break of a small break, and then we can restart again, maybe half an hour or after 1 hour, whatever. But for Forex has to get over today. By hook or by crook, Forex has to get over. We cannot do again and again. I mean, it is getting too much like into loop, which is not good. Okay, so what is a, you know, when you buy a forward or sell a forward at t equal to 0, what happens that uh, kind of, it is not important that always that forward will be honored. It is not important at all. Why? Because maybe like I bought a forward, I'm a business person basically, I have a company, okay. So in that scenario, guys, suppose I buy a forward on 1st of January to make a payment on 31st of March for that matter, okay. So in that scenario, I mean, there could be so many situations for that matter, okay. The only situation is that we buy a forward and honor on 31st of March, okay. That is the most like expected situation or most likable situation, I would say, right? But apart from that, there can be many more situations. For example, they sent a consignment to you and you did not like the consignment at all. Okay, so what will you do? You will send the consignment back. I don't need. Okay, so you'll have to cancel the forward. Why do you need a forward contract any at all? That way. Okay, so there are so many situations that can happen after taking a forward. And what are they? Look at this. So delivery under the contract, delivery on due date. I was talking about this actually. So delivery on due date, it is very, very easy. Nothing you have to do. Then early delivery and late delivery, both are complicated and we really need to know. Okay, just leave it like that. Then cancellation of the contract. If you cancel before the maturity or on the day of the maturity, it is completely fine. Okay, so late cancellation is a problem actually here. Okay, so this is fine. This is fine. Now, when I talk about extension of the contract, then extension on due date and early extension are easy, but then again late extension will have some implications which are very, very unique actually. So what I want to tell you is that, guys, what these all which I showed you here, okay, these looks like very complicated. I tell you why, because do you know one fact for sure that once you enter into a forward with the bank enters into another forward with another bank. So when you fail to perform, when you do not honor your contracts, the bank is in a problem. Okay, and the bank gets exposed actually. For example, on 31st of March, okay, you blocked $1 lakh to buy from SDFC Bank on 31st of March at a price of rupees 83 per dollar, suppose. Okay, so on 31st March, you do not turn up only, and the moment you blocked a deal with SDFC Bank, SDFC went into the interbank market and they blocked one more deal, okay, a forward cover basically. So if you did not go to take the delivery, the bank will get delivery from the another bank. What will it do with the currency? It is exposed. So these are the complications that can happen if in these situations: early delivery, late cancellation, late extension. Now again, when I say late, so there are a few things that you must know about late. So 31st March, okay, so suppose if I draw a timeline, and this is like 1st of January, then this is 31st of March. Okay, so guys, you know, the FEDI rules, the Foreign Exchange Dealer Association of India rule says that you are allowed to not convey us whether you are coming, not coming, cancelling, extending, whatever, up to more 3 days. You previously it used to be 14-15 days actually. At this point of time, it is no more that a longer time or that a longer period. Only 3 days are allowed. That means it will be what, 3rd of April? On 3rd of April, if you do not turn up, nor do you intimate anything to the bank, then your contract gets cancelled automatically without any information to you. Okay, so these are the two things, but you have a buffer of 3 days. You can come within these 3 days. You can ask, ma'am, what is the difference? There is a difference. If you suppose come on the 2nd day, 2nd April, then the rate prevailing on 2nd of April will be the rate applied for cancellation. Okay, but if you come on 4th of April, then the rate prevailing on 4th of April will not be applicable. Rather, the rate on 3rd of April, the rate at which there was a auto cancellation by the bank of your contract, will be applicable. Guys, did you understand that? Did you understand that part? I will give you such a beautiful example that you will just go, I mean, mad. You'll say, wow, what have I learned? Okay, so now here guys, so what is cancellation? Cancellation means entering into a reverse contract. Careful. So if you are cancelling, suppose 0, 1, 2 and 3, okay, I entered into a contract like this, okay, and I come here. Can anybody tell me that how many months of maturity are left for the contract? The original maturity was this one. So how many months are left? 2 months are left. So if you want to cancel here, there are some students who ask, ma'am, why didn't, suppose I bought forward 3 months, and now I want to cancel at the end of the first month, 31st of Jan. I will not. Cancellation means entering into a reverse contract. That means if you had originally bought, now you will sell. So whatever is the profit or loss will be credited or debited to the customer's account. Yes. So now you will enter into a reverse contract here, this one, and your contract would be cancelled. If you come here, then you will enter into a reverse contract for 1 month forward. That means if you bought originally, now you will sell 1 month forward to cancel. If you come on the 3rd, at the end of the 3rd month, then you are not having any maturity left. You will cancel at the spot rate basically. Okay, that is how it works. So guys, can we move ahead with the examples? I think that would be better for us, and you will understand it is not very difficult. I will do question number 18, question number 19, okay, and then we can do question number 20, of course. And then we can do question number, numbering is wrong or something. No, 20 and 23 we can do. one question we can leave because I typed 2 questions by mistake of early delivery. So one question is a bit more complicated than the other one. So I will do the complicated one. Once I do that, you will be able to do the another one easily, and the solutions are anyways out there. Okay, so these questions back to back we have to cover. It will not take too much of time, guys. It is very, very easy to handle. Now, the question in front of you coming up is: a bank enters into a forward purchase TT covering an export bill for Swiss franc 1 lakh at rupees 32.4 due 25th April and covered itself for same delivery in the local interbank market at 32.42. Did you understand? Let me tell you one thing. A bank enters into a forward TT covering an export bill. Can you please tell me this question is of receivable or payable? Can you answer me please? This question is of receivable or payable? Look at the question and tell me please. Guys, this question is of payable or receivable? The bank is buying. The bank is buying. Can you see? The bank enters into a forward purchase receivable. Yes. Okay, at the rate of 32.4 due 25th of April. Okay, and covered itself for same delivery in the local interbank market 32.42. This information is of no use here. This information is of no use. However, on 25th of March, exactly 1 month before, exporters sought for cancellation of the contract as the tenor of the bill is changed. In Singapore market, Swiss francs were, look at this. In Singapore market, Swiss francs were quoted against dollars as under. I think you did not focus on the question, or maybe like it just went away like that. So your receivable is of Swiss franc, Swiss FCS 1 lakh, correct? No? Due 25th April and covered itself at the rate of, that means the customer sold forward at 32.42. What do you say? We need to think from our point of view, correct? We need to always think from our point of view. So at the rate of 32.4200, correct? No? Now, how would you should definitely be very, very careful to the fact that if the question is being, even if it is being framed from the bank's perspective, you are supposed to calculate answer for yourself. They are just trying to confuse you actually. Okay. So this is the situation. Now, they are saying that means, guys, this rate is, you know what? This rate is rupee per Swiss franc. No, we have to think from our point. These sums are, all the sums of cancellation and extension are being done from the customer's perspective, not from the bank's perspective. They might give you some data, and as a result of that, you might get confused. But the answers have to be computed for the customer only, by default, no change. So basically, this is the 32.42 rate at which the customer sold how much, how many months for? 1 month for, I mean, whatever it is, like, have they written something about that? Only this is the contracted rate basically. So we do not, even if we do not know, how does it matter actually? So this rate the customer sold forward. Okay. However, on 25th of March, 1 month exactly before the maturity, the rates quoted to you are this. In Singapore market, so basically guys, we need rupee per Swiss franc 3 month, rupee per Swiss franc 1 month forward rate. Okay, 1 month forward rate. In the question, if you see, they have given dollar per Swiss franc and dollar per, no, it is Swiss franc per dollar. Now I told you one thing. I told you in the question while discussing forex that you will see that now looking at this I also missed out. But when I saw this, I had a kind of reality check that okay, it is rupee per dollar, and if this is rupee per dollar, this rate has to be Swiss franc per dollar. Okay, so you are being given okay Swiss franc per dollar equal to 1.5076 and 1.5120. You did not notice one thing here, that it is interbank rate. So in the whole thing we need to calculate, wait a minute please, in the whole thing we need to calculate rupee per Swiss franc rate. They've given you Swiss franc per dollar and rupee per dollar. You will use these two set of quotations to compute 1 month rupee per Swiss franc rate actually. But the problem is that, you know what is the problem? The problem is that your Singapore market Swiss franc per dollar rate is a retail market rate, whereas rupee per dollar rate is a wholesale rate. And since it is a wholesale rate, you will need to apply TT margins here. Is it good? Is it good all of you? Guys, please respond. Okay, so here look at this now. The customer sold forward on Swiss franc. Can you see that? Okay, here he opted for cancellation on 25th of March. Okay, that is a month before. For that he needs to enter into 1 month forward buy contract. Can you see that? So guys, here what they did or rather we did is rupee. Correct. Okay, so 49.4302. Okay, and you convert the rates. The rates are 49.4302 and plus the swap points you add. This becomes the 1 month forward rate. Then you adjust TT margins, and now you have 1 month forward rupee per dollar rate, because that we needed to do all this exercise because the rates were interbank rate. Okay, and then you adjust this rate, Swiss franc per dollar, or in other words what you can do, you can take an inverse of this rate. Look at this, I have taken the inverse, correct, and then get the values. If you have sold forward, what will you do? You need to do yes. What you need to do is that, guys, we have only 3 people attending. Who are, I think only Harsha and Pooja and Veeru, only 3 people are attending the lecture, right? Anyway, let us finish this topic, then we talk. Okay, let it be. So now here what is happening, you calculate the rupee per Swiss franc rate. Rupee per Swiss franc rate you calculate. Okay, so now as a customer, you are an exporter, you sold forward. Please Harsha, tell me, in order to cancel what will you do? In order to cancel what will you do? You will buy 1 month forward, yes or no? You will buy 1 month forward and buying rate is this one. So you sold at this, you will buy at this, multiplied with the 1 lakh Swiss franc. This is the loss that you have incurred. Can you tell me who all are people are attending the lecture except for these 3? I can see only 3 people attending the lecture. Better I could have recorded and given to you, right? Yeah, bye. Very good. Then question number 19, guys. Guys, question number 19 I am not doing in the class now because it is a very, very simple sum. Every student of CA Final knows this. Now, Why did I then take this question? I only took this question to tell you or get an opportunity to explain you that this part of the data, margins, okay, margins, that is completely okay. It is okay. So margin is 0.80% for buying and 0.25% for selling, correct? No, I just took this. You can, if you see the solution, you will be able to understand completely. But most of the students keep on asking me that, ma'am, why did you margin for buying? For them it is meant for ask rate, for them it is meant for bid rate. But they forget one thing, that quotations are given by the bank. Quotations are given by the bank, and if the quotations are given by the bank, the language whatever is given to you is from the perspective of the bank. So when they say margin 0.80% for buying, that means that 0.8 would be applicable to the bid rate, okay? And when they say 0.25% for selling, that means 0.25% is for ask rate. Are you fine, all of you? So you can see the question. I'm not disturbing you at all. One question 23 first I would want to do, and then I will do question number 21. Okay, so we have two early delivery questions. Rather, we have three questions in the category. I do two. One is like a repeat affair. Okay, so let me do question number 23. Okay, let me finish two questions, then we would be done with this topic of fate of forward contracts. Two questions, but very, very properly. All of you are ready? Now, no, not necessarily, Viru, not necessarily. They can give you from the customer's perspective only, not necessarily necessary that they would always give you from the bank's perspective. But yeah, the answers have to be calculated from the customer perspective only, of course. Guys, why not like complete this topic, take an half an hour of break. Okay, I will just relax a bit, have my tea or coffee, something, and then start again for 1 hour and finish the topic. What do you say? Will that not be fine, rather than kind of pushing the topic, maybe like if suppose I'm too tired today, okay, so we can do that, right? We can always do that. I couldn't sleep in the night, that is why I am feeling very tired, nothing else. I slept at around 1:30. I had to wake up at 5 because I had lecture 6:30 to 9:30. That makes more sense, but we have to finish the topic because any which is the students are also not coming too much. They all of them are watching recorded only. Correct now? So what is the point of like stretching unnecessary also? I will complete the portion, but we can do in 2 hours of slot also, right? Start. So guys, the question is on 1st of October. Give me a second, please. Okay, let's start, guys. This is something I'm going to teach you very properly. Or if you're ready, on 1st of October, this is early delivery sum. Okay, on 1st of October 2020, Mr. Guru, an exporter, enters into a forward contract with the bank to sell $1 lakh on 31st of December 2020 at $75.40. Why not I take this question somewhere else and start teaching you? Would that not be better? I feel okay. That would be better, right? No? Or maybe I can do here also. Wait, just relax, all of you. Don't miss out on the attention part. Now, on October 2020, Mr. Guru, an exporter, okay, enters into a forward contract with the bank to sell $1 lakh on 31st of December 2020. Where are we standing? 1st of October. Okay, so October, November and December, this is 3 months, and the question is of exporter at rupee per dollar 75.40. That means this is the rate at which this has been promised to be delivered and sold, 75.40. However, at the request of the importer, Mr. Guru received the amount 30th. This question is of early delivery. He received money on 30th of November, only 1 month before. Mr. Guru requested the bank to take delivery of the remittance on 30th of November 2020 before due date. The interbank rate is given to you. I'll draw something to you. My students already know what I'm going to do. So interbank, give me a second. Interbank, and again interbank. Okay, then you have, and the dates are 1st of October, then you have 30th of November, look at this, and 31st of December. Guys, you cannot, I keep on telling this thing to all my students that you cannot imagine how much I had to struggle with this concepts actually, especially early delivery, auto cancellation ones and all this, kind of the difficult ones, the swap loss and all that. Because I could not find any literature in any book that what is the reason of, I could not understand from where this interest of outlay of funds is coming, from where this swap loss or swap gain is coming. Then I took 6 months to derive this solution. You will not believe, even I went through the lectures of other faculties also on YouTube to find out if something they are saying logical. I couldn't find anything. Everybody was saying this minus this plus this minus this, and this divided by this. That is not a logic. One day I sat and I tried to solve myself. I could solve all of them, and there was some catch that I could get. Students like Harsha and Viru already know what I'm talking here. Now, on 1st of October, there is a bank also. Agree? There is a bank and there is a customer, guys. So the customer said, no, it is not tough, Pooja. Just wait for 2 minutes. You will realize this concept is not tough at all. Now look at this. So customer promised to sell $1 lakh. Careful, just look at the diagram, nothing else you have to see. The question is any which is solved. The customer sold to the bank how much? Okay, how much? $1 lakh at the rate of 75.40. Okay, they have not given the rate at which the bank sold to interbank in the interbank market. Can I assume this to be 76 for you if you agree? Even if they do not give you this rate, it is okay. We can still solve the question, but in order to explain, I need to do that. So can I write assume? This is done. And on the very first day, the bank blocked a profit. The bank blocked a profit of this bank. What did it do? It entered into a contract with the customer. That customer will sell $1 lakh to the bank at the rate of 75.40, and the bank entered into a contract in the interbank market to sell the same currency at 76. How much money did they block on the first day? 76 minus 75.4, that gives me 0.6, and that will give you rupees 60,000. Yes or no? Tell me quickly, yes or no? The bank blocked 60,000 rupees on the very first day. Yes, no? Yes, very good. Now, what happened? This guy came on this date, 30th of November, and he says that, again I write here, customer. He says that, please take my currency today only. Okay. Now the bank is in a problem. Why the bank is in a problem? Because the bank has promised this particular bank, okay, that I will give you $1 lakh after 3 months. Okay. But what is happening? The customer came 1 month before. Customer says to the bank, please take this currency from me. I want to sell now, 1 month before. So what will the bank do? The bank will have to honor, because it is in the business. The customer will sell to the bank at the same promised rate, 75.40. Correct? Now, the customer cannot keep this $1 lakh for whole 1 month. It will go to the market spot and it will sell spot at what rate? Look at this. The bank will sell, this is the interbank market rate, sell spot at 75.22. So 75.22. When it does this, so basically the bank bought at 75.4 and sold at 75.22. Is it a loss or gain for the bank? Please tell me. For bank, this will be 75.22 minus 75.40. That gives me a loss of rupees 18,000. Correct? 18,000 loss because of the customer, because he came early. So 18,000 is the loss here. Now, this loss is already booked in the books of the bank. Correct? There is one more problem here. The bank is already in a contract in the interbank market, okay, that it will deliver $1 lakh after 3 months. So already 2 months are over, 1 month is pending. So the bank will buy 1 month forward, in order to honor the original contract. So the rate at which it will buy 1 month forward would be 75.27 plus 0.15. So 75.27 plus 0.15 will give you 75.42. Look at this, 75.42. Okay, this transaction, I'll change the color for you. This transaction is called swap transactions. This sell spot and buy forward. Okay, we do calculate this, but why? Do you now understand the logic? Why did we do this? Because the customer came early. He delivered $1 lakh, which he was supposed to deliver me after 1 month. What would I do with that currency? I am exposed. Okay, so I go and sell off in the market. But what will I do with that original contract? I buy 1 month forward. Correct. Now this is done. Now on 31st December, what will happen? There is a bank again. There is no customer there. The bank will go to the interbank market. Okay, it will sell at 76, the original rate, and buy at 75.42, the contracted rate. Okay, so what is the cash flow to the bank? The cash flow to the bank would be 76 minus 75.42. How much is that? And into $1 lakh. So 76 minus 75.42, that gives me 58,000 rupees. 58,000. I am not talking anything. This is a gain to the customer actually. Bank, sorry. This is a gain to the bank. Now, be very, very careful. I'm going to make you do something. So tell me something, Pooja and Harsha, that the bank had a gain of 58,000 and a loss of 18,000, correct? A gain of, Cassie, start. 58,000 is the gain and minus 18,000 is the loss. How much is the gain? 40,000. But it had blocked a gain of 60. Oh, it had blocked a gain of 60,000. It had blocked again 60,000. But because of the customer's activities, okay, it is blocking a gain of only 40,000. Should I tell you something? 58,000 minus 18,000, 40,000. Compute swap value. Swap. Sell 75.22 minus 75.42 into 1 lakh, that is 20,000. So don't you think that if suppose, okay, are you getting the point? The customer does not know all about this. This is in the books of the bank. The bank is already making 40,000. How much it is supposed to make? 60. What if the bank charges the customer a swap loss of 20,000? 40 in its books and 20 from the customer. Okay, it makes it to 60,000. Are you fine? This is a magic. This is a magic basically. And you know what? When I started doing this, I was like, shit, all the questions are like, I'm able to manage. So basically what you have to do in the sum is that the bank will not change its position. It has to earn 60,000. Did you understand, guys, all of you? I'm not explaining the solution now anymore. You can see the solution is given to you. Was it difficult, Pooja? Priyanka is not there. Is Priyanka is there? Was it difficult to all of you? No, it is a early delivery. No, it is already done. He took the delivery at 75.40 only. So his calculate, for him, he will get a receivable of 75.4 into 1 lakh dollars, okay, and plus the charges of the bank. It is not lending rate. So basically what is happening, the bank has to carry this particular loss in the books for another 1 month. Though the bank is able to recover this loss, okay, it is able to recover the loss, but then it has to carry this loss in the books for 1 month, and hence that interest of 1 month on 18,000 will also be charged from the customer. Is it okay? Look at this. So this is 18,000. So this is basically, look at this, interest on outlay of funds 18,000, and 18% is 1 month of interest. So charges of early delivery is 20,000 is a swap loss, and the interest on outlay. So this is the amount that the customer has to pay because of the early delivery. I don't think you should be like you should not be able to understand. I'm not ready to accept that part now. Guys, did you understand all of you? Please tell me. I need to go ahead now. Correct, 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 Pooja. You got it. Understood, na? So I'm going, guys, just see the calculation of the institute. You'll be able to manage now. There's nothing like very difficult here. Understood, na? Everybody understood. Okay, great. So the calculations, so the bank will charge the swap loss. Why is it charging? Because it needs to, only if it charges 20,000, then only it will be able to make a profit of 60,000. That is why it is charging. Okay, and plus the interest component. So the next question is here. They are saying that this part is done. If Mr. Guru, okay, very good. If Mr. Guru can deploy these funds in USD, he gets a return at the rate of 3% per annum, which is better. So they are saying that you have two choices. Either you do it early delivery to the bank, or if you are getting the money 1 month earlier, so why don't you invest at the rate of 3%? Okay, so they have done that part. I can explain you that part. That is easy now. Okay, so basically if you see here, yeah, so they invested this money for 91 days, not 31 days. Yeah, 31 days only, sorry, because it's only 1 month, okay, and you get this amount. So basically, guys, this is the amount, and this amount is greater than the early delivery amount, and hence we can recommend. So basically, when you get money in November, on November 30th, okay, what you should do, you should invest that money, okay, at the rate of 3% per annum. Okay, when the due date comes, get converted at the rate of 75.40. If you do that, 20,275 will not be lost, which you had to lose because of the early delivery. That is what I understand actually. She's saying, how can we assume in the exam? Okay, Harsha. So if it is a receivable sum, assume slightly more than the customer rate. If it is a payable rate, then assume slightly less than the customer rate. Fine, all of you? Clear? No, it will be clear. Why do mug up? And believe me, you can never go wrong with this solution. It can never go wrong. It is not possible only. I think you are ready. Clear? No? So let us do one more cash question here. This one. Question number 20 we are going to do. And then after this we are done with this part especially. So Z has to remit $1 lakh for her daughter's education on 4th April 2021. Accordingly, she booked a forward contract with his bank on 4th of January 2021 at 73.8775. Okay, this is a payable sum, guys. Remit at 73.7575. Okay, the exchange rate for dollar in the interbank market is 4th, 7th and 14th April. Okay, so you know why they have given you 4th April. What is the date? Yeah, 4th April is a due date. It is a due date. Okay, and if the customer doesn't turn up on the due date, the bank can give another 3 days of buffer. That is why they have given you 7th of April. Okay, on 7th of April, there will be auto cancellation of your contract and the customer is coming again on 14th of April. This question is a very nice sum because they've given a lot of things and as per the latest thing. So again, I am not interested in like these questions only because if I make you understand the whole thing, I think we would be sorted. So, but I need this question in front of me because I would need to go on the another sheet. Where do I do? Can I do here? Yes. Ready all of you, right? So question number 20. Let me write everything and then I can discuss. So on 4th of January, okay, there is an interbank, there is a bank and there is a customer. Okay, so the customer the customer entered into a promise to buy forward in the forward market. Okay, it is a payable sum, guys, at 73.8775. Is it correct, guys? And at the same point of time, the bank went into the interbank market and bought the same amount of currency at the rate of, what is the rate? 73.7575. Okay. 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 Now the question says that then comes 7th of January. And the customer does not turn up actually. That is the biggest problem here. On 7th of Jan. But we can also, what is the amount? Can you please tell me? So here the bank would have blocked a profit of how much? The bank bought at 73.75 and sold at 73.8775 minus 73.7575. Okay. Into, what is the amount? Please tell me. $1 lakh. So 73.8775, okay, minus 73.7575 into $1 lakh will give you 12,000 of profit. So by hook or by crook, it will take out 12,000 out of you. That is the logic here. So interbank, again in the interbank market, what will happen? The bank, okay, and there is the customer did not turn up, only customer. Okay. So now the customer doesn't come on the 7th of January. What will the bank do? the bank will take the delivery from the interbank market. It will have to, because it is a maturity date. It will have to, okay. It will take the delivery from the interbank market and sell in the market, okay, sell in the market at the rate of, sell spot, can I write here? Sell spot, and the rate applicable would be 73.2775. But at the same time, the bank is also scared. So the currency which came from the interbank market was sold in the sold spot, because the customer did not intimate what will he do with the currency. But at the same time, the bank thinks that what if the customer comes later? It must have the currency, and hence it buys forward, and the buy forward rate would be 73.4275. Let us do some calculations here, okay. So because of the customer not turning up, a transaction was realized here. I don't know whether it is a loss or a gain. It's sold at for bank, it's sold at 73.2775, and it had bought at 73.7575, the whole of $1 lakh, okay. And it will have 73.2775 minus 73.7575, the whole into $1 lakh will give you a loss of 48,000. A loss of 48,000, correct? It is a loss now. Now, on 14th of January, but you know what will happen? On 7th of January, the contract would be cancelled actually for the customer. The contract would be cancelled on the spot. Means what rate will be used for the cancellation, guys? What rate would be used? Can you just look at the question and tell me what rate the customer, because see, it is 7th of January evening, and till evening the customer has not come. Okay, so they cannot, yeah, correct na guys? Guys, this is 4th of January actually. That is, I'm thinking I have written something wrong. It is 4th of January, guys. It is 4th, sorry, it is 4th of April actually. I did not see that. Yeah, no. Just a minute, please. 4th of April, na? You guys also did not inform me. It is 4th of April basically. Okay. The cancellation will happen on 7th of April. Auto cancellation, not now. Okay. So again repeat. Okay. On 4th of January, the customer entered into a forward buy contract of $1 lakh at the rate of 73.8775, and at the same time the bank went into the interbank market and bought forward 73.7575, thereby blocking a profit of 12,000 rupees. This part should be completely sorted. The contract was for Jan to Feb, Feb to March, and March to April. That means 3-month contract, right? So on 4th of April, what is 4th of April? It is the due date. There was a writing error, guys, just check it out. It is a due date, okay. So on due date, the customer does not turn up, okay. The bank does not want to stand exposed in the market. It goes to the market and sells off the currency here. Look at this, sell spot at 73.2775, but it is scared. It wants to honor the customer. So what will we do? It will buy forward, okay, same amount at the rate of 73. Very good. 4275, okay. Now, the bank will wait up to 7th of April. Please be careful. The bank will wait up to 7th of April. Now, what will happen? Can you tell me what will happen? On 7th of April, the customer still did not come actually. So this will also be sold, guys. You know what is the rate on that date? The rate on the customer did not came. What should I do now? I will go to the market and sell off this particular thing. Can you understand? This particular thing. What will I do with the currency? The customer is neither coming, and it is the last date on till what the bank can wait for you. I mean, now if you're not coming till 7th of April and there's no intimation also, what will the bank do? The bank will go into the market and sell at the rate of 73, sell at the rate of 73.1575. Are you fine, guys? So this is the cancellation rate actually. This is the cancellation rate applicable to the customer also. But 73.1575 is applicable for the bank. For the customer, it will be this minus the TT margin rate. For the time being, can we put TT margin on hold? I don't want to discuss that. Okay. So what all are the calculations that we need to show here? Look at this now. So on 7th of April, okay, the customer sold at 73.1575. Pooja, please tell me the answer. And it had bought at 73 point, it is 4275 only, na? Into $1 lakh. So I have a loss of how much? 57,000 loss. Okay, rupees 57,000 loss. This is how much loss, guys? This is not, how much is that? I don't think this is like 73.1575 minus 73.4275 into $1 lakh will give me 27,000 loss. Okay, total you are saying, or what? Rupees, yeah, 27,000 लॉस होगा. और क्या डेटा दे रखा है? ये तो निकल गया. दिस इज गिवन ऑलरेडी. नाउ यू नो व्हाट, दिस इज अ लॉस फॉर द बैंक. या 27,000 loss will be there, Pooja, because this is 4275. This is 4275, no? This is 4275. This is not 7275. This is 4275. Yeah, this is correct only. There is nothing wrong. It is 4275. Check out on the rates, please. It will sell spot. It will sell spot at 73.2775 and it will buy forward at 73.4275. Look at the rate. Let me open that. I have a sheet. Yeah, that's what I'm saying. It is 4275. I have the sheet. Where is the sheet? Okay. Just give me a second. I'll tell you. Are you fine? All of you? Okay. So on 7th of April, I took 73 point, sell spot 73.2775. This is correct rate. Okay. And I bought forward. at 73.4275. Is it not correct, guys? Confusion you have? Look at this. So let's come here. Okay, one by one. If you're getting confused, I'll tell you. So allow me to say something. Now, just check on the rates in your book. There is no confusion at all. Don't worry. So on 4th of January, are you fine? This part is good. This part is good for all of you, right? This part is good for you. On 4th of April, come on 4th of April. The customer does not come. Okay, the customer does not come. Relax, don't worry. On 4th of April, the customer does not come. The bank will sell spot at 73 point, say yes for everything, okay? The bank sold the currency, this currency which it had promised at 73.2775, correct? No? This is correct, right? You know something, it cannot be spot March actually. There is a mistake in the question. How can you have a spot March when it is 4th of April? Only thing I can understand is that they are trying to say end of March or something like that. It is very weird actually when they write a spot March. What is a spot March doing on 4th of April? Correct? No? Relax, don't worry. So basically what happens, I tell you something. Forget about the rates. So basically here what will happen, on 4th of April, the bank will sell the currency in the market. Why? What will it do with the currency? The customer did not come, nor did he intimated. Okay, so it sells in the market at the rate of 73.2775. That should not be a confusion. It buys like immediate maturity currency again. Okay, are you getting the point? I am trying to say it sold spot. Now it doesn't have anything. The position is neutral. It basically kind of bought from the interbank market and sold in the interbank market again because the customer did not come. So the position is completely neutral, but it is a bit scared to the fact that if the customer comes at all to buy the currency, then what will it do? So standing on 4th of April, whatever is the immediate maturity rate, it will again buy. Is it fine now? Is it fine now? Whatever is the immediate maturity, okay, it will buy currency. So the immediate maturity, there is something wrong in the particular part. There is something different. I cannot buy a March rate for that matter, but then I have to, because the quotation is given like that. What do I do? So basically the immediate maturity after spot is a spot. It should be spot April. Spot April means end of April. So if it is 4th of April, the immediate maturity should be end of April. I hope you get it now, right? So it should buy 73.4275, assuming that the customer might come during this maturity. Okay, and hence 72.4275. Harsha and everybody, are you fine guys here? Yeah, basically when they say spot March, it means March end. Spot April, end of April. Spot July, end of July, like that. But you are on 4th of April basically. So if they would have written spot April, maybe, okay, I would have understood like, okay, it is like kind of, don't get into that part. Just imagine that you are standing on 4th of April. As a bank, you are just tensed in your mind that if the customer comes again, then what will happen? I don't have anything because I sold all the currency in the market. There is no forward rate, Pooja. Yeah, kind of you can say expected spot rate. Yes, you can say that. Okay, so the bank booked a loss of 48,000 rupees on that date. Now 7th April, beyond 7th April, as per the rules of RBI and FEDI, the bank cannot wait. So the bank squared off its position in the interbank market at 73 point, look at this, 7th of April spot sell 73.157. I can clearly see that, right? Okay. It is okay. That is okay. Not, yeah, she says that, ma'am, 4 is written like 7. Yeah, because little space we have now, that is why. I'll just correct it. Okay, now it's correct. So the bank booked a loss of 27,000 again, but for customer guys, there will be an auto cancellation. There will be an auto cancellation. What? The customer will have to, I'll give you two things here. The customer's contract will be automatically sold at 73.1575 minus 73.8775. Please be very, very careful. This is mistake. I have not taken the exchange margin here. Both bank and customer cannot cancel at the same rate. This rate has to be minus the TT margin, but because I want to help you match all the answers, that is why I'm ignoring that. Okay, into $1 lakh. So how much is the value? How much is the total loss on the part of the customer? So 73.1575 minus 73.8775 into 1 lakh will give me a loss of 72,000. Now look, what is the swap? How much is the swap value? Swap loss or gain? loss. Swap loss is how much? Somebody had told me 45,000. Please calculate the swap loss again. 72k, yes, 72k. Now we'll have to see how can we match everything. What is the swap loss value? So swap loss value will be basically 73.2775 minus 73.4275 into $1 lakh will give you 15,000. 15,000, yes, 15,000 loss. Okay, now the customer will be charged. Wait a minute. I got some catch here. Wait a minute, please. So that means the bank needs this one, the bank needs this one, and the bank needs this one also, correct? Yes or no? The bank needs 27,000, which I incurred because of you. The bank needs 48,000, I did a loss, and plus 12,000 also. 87,000. So the bank is going to charge 72,000 for the, if they are making the customer square off automatically without permission. So 72,000 will be debited from the customer's account and additionally 15,000. So 72,000 plus 15,000 makes it to 87,000. All of you. The bank needs to require 12, 48 and 27, which is 87,000. Okay. And the bank will charge 72,000 for the cancellation loss to the customer plus swap loss of 15,000. That makes it to 87,000. All of you, are you done? Got the catch, got the catch, got the catch. It took me 6 months, Pooja, to derive this solution. Believe me, go to internet and just find out if anybody can do this. Nobody can do. Nobody can do. Overnight I couldn't sleep. What exactly is happening? What is this swap thing? Why are we charging to the customer? Now we understand that. Okay. Should we take a break of tea? Should we take a tea break again? I think we are done with the fate of forward contracts. Okay, now you can manage on your own also. Not a problem. So this complete topic is done. Now we are left with maybe like this one more question. 22 we have to do and some 10 pages more. I think we will take around 1 hour more maybe. Oh. Oh, thank you, thank you. But I really confess that I had to go and see other faculties lectures also if they would have put there, but nothing you could see, nothing I could see there. So should we take a small break, guys, of maybe like 15 minutes or something to have a cup of coffee, because today is a very, very hectic day. I slept at 1:30, got up at 5, 6:30 to 9:30 I had the CA final AFM batch at Eldine. Then I rushed off to office. Then I went there. The CFA students were waiting there because there is a 30th of September is the last day to fill the scholarship forms for the exam, the CFA level 1 exams. If they get the scholarship, 1 lakh rupees would be saved. Okay. So total is 1,25,000. So out of 1,25,000, they have to pay only 25,000 then. So I had to like arrange for, there are some formalities that I did that. I rushed back to home for you. That is how. Let's take 30 minutes break. Okay. So maybe like we meet at 6:30 then. Is it fine, all of you? 6:30. Guys, can we start? Are you there, guys? Can we start? So guys, are you there? Should we start? Guys, you need to reply me because I'm not able to get any response from your side. So we are not left with too much of portion. It will take 1 hour approximately and we can finish it off. But you need to be there. There are of course questions, but we need to like oh, no issues, Mansa. You can see the recorded part. Now new topic is getting started. There is a new topic that we are going to start. So you can join from there. You can join from there, no issues at all. It's okay. So I'll start with Nostro and Vostro account actually. Okay, ready all of you? So question number 24. First of all, let me tell you a few things about Nostro account. Guys, let's finish it off quickly. I'll also get a bit free actually from my responsibility because I have a lot of responsibilities lying out there. Okay, you missed Mansa, the cancellation, extension and early delivery of a forward contract. But sweetheart, any which ways recording will be there. That is okay. That is completely okay. So we are going to start with the Nostro account actually. So preparation of Nostro account. Okay. Quickly let's finish the portion. Preparation preparation of nostro account and exchange position. Okay, so here if you see guys, here if you know P&L statement, okay, if you know P&L statement, wait a minute please. Okay, so what we are going to start from here is preparation of nostro account and exchange position, right? So if you at all know the difference between the P&L statement and the cash flow statement, you will be able to understand this completely. In a P&L statement, if you remember at all, okay, it is prepared on the basis of accrual method. Guys, are you able to, like, there is a buffering out there, so I think there is an internet issue, yes. Okay, so the main difference is that the P&L statement is prepared on the basis of accrual method and cash flow statement is prepared on the basis of actual method. Okay, so that is the major difference. So if you ask me guys, then nostro account is nothing but it will be prepared as per the cash flow statement, okay, and exchange position is prepared as per the P&L statement. Okay, now what is a nostro account? Suppose I am SBI bank and you are like Citibank in US, okay, in US, and I open one account with you, okay, and that account will be in the form of the current account, will be operated in dollars. I am SBI, I open an account with you Citibank based in New York, okay, and the account will operate in dollars and the form or of the account will be current in nature. That is called a nostro account. Okay, now the nostro account, how do you read a nostro account? What do you debit or credit? Usually CA students do a lot of mistake out there because you are very used to debit what comes in, credit what goes out, and so on and so forth. You are not supposed to do like that. So how, if you see a bank passbook, basically passbook, okay, or a bank statement of yours, I was just trying to be something very typical. Okay, so if you see the passbook of yours, so when the money comes inside, you say credit, and when the money goes out, you say debit. So same will be the format here also. So please do not get confused here. But what is to be debited and what is to be credited is the most important thing here. And I'm going to tell you here. Now, for nostro account, let me change the color, I'm getting bored. For nostro account, okay, so A, TT sale, TT purchase, no, not TT purchase, TT issuance or a TT remittance. Okay guys, you know something, I prepared a schedule. If you could see the video, though the video is in Hindi, if you want I can record that in English also. So basically I prepared a schedule, okay, how to study, how to extract 14 hours of your day in the coming 1 month. Do you need that? I prepare, listen, you know some Hindi at least. No, you don't understand at all? All of you don't understand Hindi at all? Thank God my mom sent me to a convent school. Okay, so because I am basically a North Indian, my Hindi is a well spoken language at my home actually. Okay. Where are you, Pooja? She went away, I feel. I prepared a schedule. So maybe like one video is there. We just uploaded, the team has just uploaded one video which I recorded. Okay, and I prepared a schedule for 2 types of people. Okay. Oh, very good. Thoda. Very nice. Okay. So thank God my mom sent me to a convent school actually. And yeah, kind of, I can speak very good Hindi. I can speak Hindi with Sanskrit actually, if you understand. And I can speak equally good English. So I have equal control on both the languages, though my mother tongue is Marwadi. You will understand. So we have just uploaded a video. I have hand prepared that what time should you get up, what should you do, what time you should do what, the study time, and you will be able to take out 13 and a half to 14 hours in the whole day. Okay, that is the kind of time available, very, very comfortable. I prepared 2 daily schedule. Number one for the students who prefer reading overnight, and one schedule for the students who prefer waking up early in the morning. So choose one of them. I was a night owl. I preferred studying during the night time. I used to study up to 4 o'clock in the morning. Okay, that way. So choose the one. Hi Pooja. Okay, now start. So let's finish the portion. Now I called your name because you were a bit like concerned ki ma'am is very low on energy today. So I had my cup of tea, and it's evening basically, not even cup of tea, and I am well charged up now, though it is almost like 9 hours I am teaching today. I am a early bird. Then choose one. Should I send you? How do I send you? You can I'll send you on the group basically. Okay, I'll send you on the group. Just let me finish the lecture. So TT sale, TT issuance, TT remittance, debit the Nostro account. Start guys, quickly we need to finish. Maximum it should not go beyond 8. Okay, I will stop the lecture at 8 today. Okay, and whatever it is, like left out 1 or 2 or 3 questions, I will combine with international financial management, and we'll finish it off tomorrow. Okay. Yeah, finally I am good. So debit the thank you Janvi, thank you. Please like my lecture. Okay Janvi, I've just uploaded a video there, and I have prepared a schedule. So please go and watch that schedule. Share among your guys. Please share that video among all your friends, whether they have taken lectures from us or not. It's a humble request. Please subscribe to the channel. Please comment on my videos. Please give a thumbs up to the videos. It is required. My team says, and I speak in front of you because I am very shy speaking all these things. But my team says, what is the point of taking so much of lecture if your students are not even subscribing to the channel? They are not putting a thumbs up also, not commenting also. So please, not here. Okay, when the videos are uploaded, please do comment whatever you feel. A nice feedback maybe, I would be happy. Okay, thank you. Thank you, Janvi. So, Janvi, please share that video among all your friends. Debit the Nostro account. Why? Why should I debit the Nostro account? Now, listen to me carefully. 4 items will be there. Number 1. So, I am an Indian. Listen to me carefully. I am an Indian. I know SBI Bank. There is a business associate of mine who stays in US. I need to transfer $1 lakh to him. Okay, I will go to SBI. SBI will instruct, okay, to the Citibank in US to give $1 lakh to my business associate. In return, I will give, suppose the rate is 83, then in return, I will give rupees 83 lakh to the SBI. Okay. How would you decide whether whether the Nostro account has to be debited or credited for that matter? Okay, I tell you something. So guys, when the dollars will go outside, debit. When the dollars go outside of my account, debit the Nostro account. Okay, when the dollar comes inside, credit the Nostro account. In this case, I am an Indian. I gave rupees to SBI, and SBI instructed Citibank to pay $1 lakh to the business associate of mine. The dollars went out, and debit the Nostro account. Okay, then B. TT purchase. Now TT stands for telegraphic transfer. When there was no SWIFT transaction, online transfer of money, we used to transfer money through telex wire. Okay, so the name is still prevailing, basically cash transfer. Okay, so TT purchase, credit the Nostro account. Why credit the Nostro account? Suppose you stay in US and your parents stay in India. You want to send $1 lakh to your parents to buy house. You go to the Citibank in US, you deposit $1 lakh. In return, SBI will give 83 lakh rupees to your parents. There is an inflow of dollars and hence credit the Nostro account. C. Okay, so here then DD purchase, demand draft purchase. Again, credit the Nostro account. Why? Because again, suppose I have written a book. There is someone in the US who wants this book. $100 is the price. He will go to Citibank, give $100, get the DD couriered to me. I will present that DD to SBI. SBI will give me 100 into 83. But did you not see that $100 was first deposited there and hence credit immediately? Now D. DD sale, remittance, DD remittance or issuance, whatever language you see here, this will be debit the nostro account but not immediately. Opposite. I want a book. Suppose somebody has written a book in US and the price is $100. Okay, so 100 into 83, how much is that? 100 into 83 is 8300. Okay, 8300. I pay 8300 to SBI. SBI gives me the DD. Look at that. The movement is of rupees. No dollar is, there is no dollar movement out there. And hence, debit the nostro account but not immediately. So I courier that DD to that author. The author will present the DD in front of the bank and the bank will give him the $100. So those $100 would be debited when the DD is presented and hence debit the nostro account, but not immediately. Rather on the day of execution. I think we are sorted here, correct? Now, the next part that we are going to discuss is exchange position. It behaves like a P&L statement. So whatever is bought or sold, everything, whether accrual, actual, everything would be entered. And that is why, I don't know whether you know this or not, whether somebody has told you this or not, that if there is a cancellation of a forward sale or anything else, where the transaction has not matured, okay, it will mature sometimes in future, no entry would be there in the nostro account because it was not entered only. Why? To cancel. But in P&L, okay, like export bills purchased, it will not be entered in the nostro account. There is no cash transaction out there. Forward sale contract, no cash transaction. But it will be entered in the exchange position because it is behaving like a P&L statement, accrual basis. So, if a forward sale is cancelled, you need to take a counter entry in the purchase column to cancel it out. Okay, but no such entry is taken in the nostro account because it was not entered. Why to cancel? Guys, I hope you are understanding the point. It is the aggregate. It is the aggregate of all purchases and sales on accrual basis. Okay, I think we are sorted here. Let's complete the question, guys, now. Okay. Now, this is the easy question. Then leading and lagging is there. Netting is there. Okay, there are questions which will not take time, but yeah, let's see how much we are able to cover today comfortably. You as a dealer, okay, in the foreign exchange have the following position in GBP on 31st of October 2019. Balance in the nostro account, credit. I think I will do this somewhere, guys. I have the question. I think I will do this question. That sound better. Or are you fine here? I don't know. Look at this. Balance in the nostro account, credit. Okay, it's 2 lakh. Always remember, these two balances will be different. Look at this. This is for nostro account opening balance and this is for, I'll change the color maybe. And this is for the exchange position. I will prepare my own account here. Purchased a bill of London. Okay. So guys, tell me one thing. Look at this. So if I don't have space here, can I do like this? nostro account. Okay, now, so opening balance, where is that? Balance in the nostro account, credit. Okay, balance in the, so this side would be debit, this is debit, and this is credit, correct? Now, so balance brought forward, how much is that? 2 lakh. Okay, I'll take 2 lakh here. Then what? Then here again they say, this is not relevant from the nostro account, but purchased a bill of London. Is there any cash movement? No, no. Sold forward TT, forward, sold TT, no, sold forward TT. This is again not a cash transaction. It will somewhere mature somewhere in the future, not to be taken in this thing. Okay. Forward purchase contract cancelled. Forward purchase contract cancelled. I don't bother because I did not take an entry only. Remitted by TT. TT remittance. TT sale 1,50,000. Can I say right here debit? TT remittance. How much is that? TT remittance will be $1,50,000. Just for the sake of mentioning it. Okay. Then I'm sorry. Okay. So now draft on London cancelled. This also I cannot. Draft on London. Please think and tell me. Draft on London. Draft on London is what? DD sale? DD sale or DD purchase? Please tell me. Draft on where? You as I am an Indian. Okay. Okay. Draft on London is what? DD sale or DD purchase? Please tell me. DD, no Pooja, no beta. Draft on London cancelled. Draft on London means you issued a draft on London. DD sale है बेटा ये. DD sale है. Who is sending me hearts? So many hearts coming up. Why suddenly? समझ में आया अभी? ओके यस ना. और वैसे भी पूजा सुनो सुनो सुनो. हाँ कैंसिल तो कैसे वैसे भी हो सकता है, बट ड्राफ्ट ऑन लंदन कैंसल्ड मतलब तुमने लंदन के ऊपर ड्राफ्ट इशू किया था, राइट ना? तो देखना ड्राफ्ट ऑन ज्यूरिक कैंसल्ड ऐसा आएगा. तो तुमने डीडी सेल किया था बेटा, अब उसको कैंसिल करने के लिए डीडी तुम परचेज कॉलम में डालोगे, लेकिन नॉस्ट्रो में नहीं आएगा. अब देखिए इन लोगों ने क्या बनाया, देखो यहाँ पे, देखो यहाँ पे इन लोगों ने भी तो वही किया. कुछ बोला है क्या समय? इन्होंने क्या बोला है? डिसाइड द स्टेप्स would you take if you are required to maintain a credit balance of GBP 65,000 in nostro account and keep as oversold position. पहले इतना बात करती हूँ. if you are required to maintain a credit balance of GBP 65,000 nostro account. अच्छा ठीक है. तो बेसिकली अगर देखोगे ना तो बैलेंस यहाँ पे 2 लाख का है, $2 लाख का है क्रेडिट में, और टीटी रेमिटेंस है 1,50,000 का. ओके तो इफ़ यू सी हियर there is a credit balance of only 50,000. हाँ या ना जल्दी बोलो. डेबिट में 1,50,000 है, क्रेडिट में $2 लाख है. पहले हाँ ना बोलोगे तो मैं आगे बढ़ती हूँ. There is a credit balance of $50,000 in the nostro account. They are saying that कि तुमको 65,000 का करना है. तो can I not take लाइक व्हाट, उन्होंने क्या लिखा है, टीटी परचेज कर लो, टीटी परचेज कर लो यहाँ पे। तो अगर मैं टीटी परचेज कर लेती हूँ $15,000 का, तो ये टोटल कितना हो जाएगा पता है तुम्हें, टोटल हो जाएगा 2,15,000 का। और यहाँ पे हम लोग क्या कर लेंगे, बैलेंस कैरिड फॉरवर्ड हो जाएगा 65,000 का, और दोनों को टोटल, आई मीन हिंदी, या सॉरी 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 सॉरी, ओके 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 सॉरी, okay, so I'm saying here that balance brought forward is 2 lakh and TT, this is an artificial entry, all are laughing on me. Okay, so TT purchase artificial entry, that means you sell TT worth $15,000, okay, to make it $2,15,000. Here it is like, you know, it's already 1,50,000, so this $65,000 is a credit balance that we are carrying forward. So here this will be 2,50,000. Is it okay, guys? Look at here, I'll show you something. The bank has to buy spot TT, can you see that, 15,000, to increase the balance of nostro account to 65,000. Are you fine, all of you? Understood. It is easy, guys. Now when you are preparing, when you have exchange position, look at this, opening balance overbought, purchase and sales, two columns are there, okay. Bin purchase, look at this, purchased bill on London, entry taken, look at this, taken entry, taken entry. TT sale, forward TT sale, but they will enter definitely. Cancellation of the forward contract, okay, you bought, oh, forward purchase contract cancelled. So you actually purchased, in order to cancel you will put into the sale 60,000. Look at this, TT sales again here, draft on London cancelled, they have put in the purchase column. That means originally it was DD buy, you bought DD and hence in order to cancel you put into the what, DD, or aye, DD sale tha, it was DD sale. No, what am I saying, what has happened to me? So I mean everything, I'm just kind of, I just explained to her, okay, that this is DD sale, draft on London is DD sale, okay, because we issued a draft on London, okay. So if that is cancelled, that amount has to be taken in purchase. Am I correct? My brain is rushing too fast actually. Yeah, it is in purchase. Yeah, it is correct, correct, correct. Okay, so the balance is, guys, the balance is 330 and 320. So closing balance oversold is, that means 10,000 is more here. So balance carried forward, oversold position is by 10,000. But never forget that 15,000 that you took entry here, this 15,000 needs to be adjusted there also. This one, purchase. So you will, what will you do? This 15,000 will be entered here. You will add 15,000 here. Okay, so this is not 320, this will not be 320, okay, rather this is actually 335, this is 335 and this is 330. So basically it is not oversold by 10,000, it is overbought by 5,000. Is it fine, all of you? Because whatever you did in the nostro account, you bought TT spot, bought TT spot worth 15,000, that entry has to be taken here. So if you take TT purchase in the purchase column, it becomes 335. So basically it is, if you see that without considering that 15,000, it looks as if the exchange position is oversold by 10,000. But if you consider that, you are actually in an overbought position by 5,000. I think they are sorted. Now come back again. Now not much is pending, even if we like have to take it further. Tomorrow we have to complete IFM and the pending part of the forest 2-3 questions, because IFM we have hardly 4 questions only or 5 questions. So that will not take more than 1.5 hours. Okay, so half an hour 40 minutes we take this, 2.5 hours we are done with complete IFM and forex also. Okay, the transaction exposure. What is transaction exposure, guys? So basically when you, there are 3 types of exposure actually. Types of exposure, if you see, I will give you a proper format of things you will understand properly. Allow me to do that. So types of exposure. Okay, and this is like transaction. Harsha, you did not understand. Exchange position is nothing. Look at this, careful. Opening balance overbought 1 lakh, purchase column. Overbought will go into the purchase column, correct? Then purchased bill of London 1 lakh, again 1,60,000. Then they say sold forward TT. Sold forward. So TT sold forward in the sales column 1,20,000. Can you see this? Can you see this? Then forward purchase contract cancelled. That means there was a forward purchase contract earlier which got cancelled. In order to cancel, you will have to put 60,000 in the sales column. Look at this. Then remitted by TT. TT sales. Again 1,50,000. Then draft on London cancelled. Draft on London means DD sale. If you want to cancel that, 60,000 has to come to the purchase column. Look at this. Okay. When you total this, you get 330 and 320. If you see this, you will see that you are oversold by $10,000 or pounds, whatever. I am selling dollars, it is pound actually, it doesn't matter. It is oversold by 10,000 pounds because 330 is 10,000 more than 320. And if you consider that this part, if you consider it, and you bought a TT 15,000 on the spot because they asked you to maintain a credit balance 65,000. So if you consider that 15 and add it up to the purchase column, you will see that after adjusting that, it will be overbought by 5,000. Look at that. They would have said, see, this would bring the overbought position on GBP to 5,000. Look at this. Are you fine, guys, all of you? Now, here transaction, then accounting exposure and operating exposure. Okay, so transaction exposure means risk basically. Okay, so and here there are two types of hedging techniques. I mean, what is transaction exposure? For example, normal, like suppose I bought $1 lakh worth of goods, garments from US on 1st of January. I'm supposed to pay on 31st of March. Okay, because I'm not paying now, I have some kind of risk, and that is called transaction exposure. I am facing a risk because I entered into some kind of transaction for that matter, like export, import, borrowing, investment, something like that. Now we need to hedge that situation. You cannot eliminate the risk. So two types of hedging tools are available, internal and external. So in external, it is forward cover, then it is money market cover, then you have futures cover, and then you have options cover. This we have covered, and this will do in derivatives. In internal hedging technique, we have like leading and lagging. Okay, then we have invoicing. Okay, then we have netting. So all these, basically what is the difference between the two? In case of the external hedging techniques, you employ some outward agency like a bank or exchange and pay money in order to hedge your situation. In case of internal, leading, lagging, invoicing and netting, you don't employ anybody, but naturally you try to hedge actually. When you do the sums, you will be able to understand. Thank you, Harsha, for asking me. Now, look at this. Shanti exported 200 pieces of designer jewelry to, I think this is, the solution is not there. That means it should be a May 23 paper question. Shanti exported 200 pieces of a designer jewelry to USA at $200 each. To manufacture and design this jewelry, she imported raw material from Japan of the cost of yen 6,000 for each piece. Okay, there is an import, there is an export. The labor cost and variable overhead incurred in producing each piece of jewelry are 1,300 and 650 respectively. Suppose spot rates are rupees per dollar this, and yes, it is a very, very easy question. So basically you will take out profit using one set of rates and take out profit using the second set of rates. The difference between the two will be your transaction exposure. I think I prepared answer for this sum. Well, I'll give you. May 23 suggested. Why to do the sum when I can save some time? You can just click a picture. You can just click a picture of that solution and we can move it. It's a very useless sum basically. That means you have to take out, for example, I imported goods worth $1 lakh. When I entered into the transaction, the rate was 80. Okay. and then when I close, it is like 85. So 85 minus 85 rupees per dollar into 1 lakh dollars, 5 lakh rupees is my transaction exposure, negative. I lost. That is what you are supposed to do. You don't need my help for that here. I don't know where is this answer. I don't know where will I get. I prepared this thing. Where is that? I don't know. Which question number? I'm not able to find, but that has to be May 23 question only. Okay, give me a second, please. There are many questions that I have done here, and they are matching. So in the Hindi batch also, I gave the solution to the student. They said, "Ma'am, we'll be able to manage. If there is a doubt, we'll ask you, because any which we'll have to reduce the amount of lectures on the YouTube, because we have to study for the examination." I do agree with that. I would have definitely done, I'm sure. It's not there. Then I'll do, guys. I'll not leave it like that, because I don't know whether you'll be able to manage or not. So can anybody help me doing this? So basically, profit equation has to be like this. I'll do here. So profit, can I write profit as per this? So this has to be 200 brackets open. Okay, dollar 200 sale price. Okay, so you will sell. Okay, you will use this rate, correct, into 65. I will remove the bracket, put the bracket later on. Okay, then minus, how much is the cost? Yen 6,000, but there has to be a cost, and the cost is, guys, we'll have to calculate the cross currency, because Shanti has to be an Indian only. Shanti cannot be a US citizen or a Japanese actually. And we want rupee per yen rate basically, correct? No, we want rupee per yen rate. Okay, we need to do that calculation, cross currency. Guys, should I do one part, and will you be able to manage the second part for yourself, so that we can quickly move? I do not mind writing the whole thing. I'm a hardworking person, but then I think you can manage that, right? So if I do one, will you be able to manage for the second part? Take out the profit, that's it. So maybe like we'll have to take an inverse here. So rupee per dollar, give me a second, allow my brain to operate. And this is basically yen per dollar is given to you, yen per dollar is given to you, but I want dollar per yen, and that will be 1 by 120 and 1 by 115. Agree, all of you? And the rate that I get would be 65 divided by 120. That gives me 0.5417, and then I get 66 divided by 115 will give me 0.5739. So if you have done, no, this is like, this rate is basically rupee per yen. Okay, so if I have imported, that means to say this rate will be applicable to me, correct? So can I use that rate here, 0.5739 into rupees 0.5739 per yen, correct? Then again minus this 13 and 650, 1300 minus 650, correct? No? And then maybe I can change the color. I speak everything. And this one, and this one, and this one, and this one. Just take out the profit and you're sorted. Similarly, you will do for the second set of rates, this one. Okay, you will calculate the profit, take the difference, and we are sorted. We can do it, yes. Then the next one is leading and lagging. This question was asked in the November 12th. So what are we doing? Internal hedging techniques, because forward cover and money market cover, you have any which ways you have completed. Okay, so leading and lagging we are doing here. So I have put one sum of leading and lagging, institute sum actually. Then we have sum of invoicing also. Look at this, this sum is very important from the examination. They can ask you again, but believe me, the solution that they have given is a complete blunder. I cannot even discuss that solution because it is completely wrong. Now look at this. NP and company has imported goods for $7 lakhs. The amount is payable after 3 months. The company has also exported goods worth $4,50,000 and this amount is receivable in 2 months. For receivable amount, a forward contract is already taken at 48.9. The market rates for rupee and dollar are as under. So spot is given to you. Okay. So the problem is that you have a payable and you have a receivable. Okay. That is not a problem. The problem is that you have a payable at the end of the 3rd month and you have a receivable at the end of the 2nd month. And you have already taken a forward cover on this. Taking forward cover on receivable means selling dollar forward. Selling dollar forward, because it is a receivable, you sell and hence you sell in the forward market also. Spot is given to you 88.5, 88.7, 2 month and 3 month. The company wants to cover the risk and it has 2 options as under. So I will give you my solution to understand. To cover the payables in the forward market and to lag the receivables by 1 month and cover the risk only for the net amount. No interest for delaying the receivables is earned. Evaluate both the alternatives if the cost of the rupee fund is 12%. Which option is preferable? I don't care about their solution. Now look at this. So basically what they are saying is, I'll go slow now, don't worry. Any which is we are very near. Now, so one method is that I leave as it is. That means allow me to buy a forward cover on $7 lakh. What rate can I buy a forward cover? I think guys, it is not 88, it is 48 actually. Yeah, it is 48. It is not 88, it is 48. Please rectify this, because I don't mind taking 88 also, but then the rest of the solution that you have will get here and there. Okay. So if I am standing at 0 at this point of time and I have booked a forward on the receivable but not on the payable, I will buy a forward on $7 lakh at the rate of 48.7 plus 0.45. All of you, I will buy a forward on $7 lakh at the rate of 48.7, okay, plus 0.45. Do you agree on that? Nobody is saying what happened. Okay, so 48.7 plus 0.45. I'll quickly do 48.7 plus 0.45, 49.15. Okay. So if you see the question, I'm saying that buy a forward on that and allow things to happen the way they are. That means, yeah, when the money comes at the end of the 2nd month, okay, 4,50,000, look at this. Cover the payables in the forward market means the firm can book a forward cover at this rate. Okay. Also the firm receives the receivable at the rate of 48.9. Don't disturb. Allow both things to happen at their own maturities. Okay. At the end of the 2nd month. So when this money comes at the end of 2nd month, guys, then you convert it at this and you get this. The problem is there that this money is standing at the end of the 2nd month. Okay. And this is an inflow. Also, you have $7 lakh into 49.15 payable at the end of the 3rd month. What will you do? You will apply an interest rate of 12% per annum for 1 month and bring that money to the end of the 3rd month. Look at this. And this money becomes this one and take a net. So net outflow is this. Okay. Now, this is one method. That means you do nothing. You buy a forward on the payable, you sell a forward on receivable, and then when the receivable comes, okay, you convert it at the end of the 2nd month the way it should be, and then take that money ahead by applying interest rate and then net it off. Okay. The second method is that you lag your receivable. That means you ask your client to pay you after 1 month. That means at the end of the 3rd month. Okay. By doing that, what will happen? So 7 lakhs minus 4,50,000. That means $250,000 basically. Okay. So you will not buy forward on $7 lakh now. You will buy a forward only on $250,000. But that is a problem. The problem is that you have already sold forward on 4,50,000. So you'll have to cancel that actually. So standing, look at this. Look at this. It is very important for you to understand that it is basically 0, then 1, and then 2, and then 3. Okay. We are standing here at this point of time, and then we decide that we want to lag our receivable. So you will buy a forward only on $250,000. That means basically you are not wanting that forward cover that you have taken on receivable. You need to cancel. So originally you sold, now you will buy 2-month forward. Why 2-month forward? Because I'm standing at 0 only. So you will buy 2-month forward at the rate of 48.7 plus 0.3, 49. Okay. So what is the rate at which you sold? I sold at 48.9 and I buy at 49. There is a 10 paisa loss. 10 paisa into 4,50,000 will give you a loss of 45,000 rupees. This loss, you calculate that loss here, but that loss is not payable here. That loss will be payable here. Now the problem is that $250,000 into 49.15 stands here, and that loss 45,000 stands here. Both are payable actually. So in order to take a total, what will you do? You will take this money here along with interest of 1%, 12%, 1 month, 1%. Are you fine, all of you guys? Look at this. In this case, the firm can lag its receivable by 1 month and buy a forward cover on the net amount of $250,000 at 49.15. Also for doing that, it needs to cancel the existing forward on receivables. Cancellation would involve entering into reverse contract. Okay, this one. So sell because it was a receivable minus buy, and this amount becomes due to be paid at the end of the second month, not now. How can you ask for these two rates that you took, this rate and this rate? These two rates were applicable for second month end. You can't ask for money at 0. Calculation was done. Application will not be done. And that is why you will apply only 1 month interest rate, and this is the answer. Guys, did you understand, all of you? Yeah. Correct, no? Okay. Guys, can we wind up at 7:30, quarter to 8 possible? I can complete Forex and IFM tomorrow, one shot. We'll start the lecture at 7 tomorrow. And 3-4 questions of Forex and 4 questions of IFM we would be sorted. Okay, because I have taken test of the Hindi batch today of full course, and I have not given them the solutions yet. It is already 3 hours. So I'll be able to, I'm just trying to balance all the balls, right? Now I'll balance all the balls. I take care of you, I take care of all the batches. I mean, everybody should be attended. For today, you can start revising. So tomorrow, by hook or by crook, we have to finish this, and plus IFM also, right? No? Yeah. So netting, the next topic is netting. An Indian company, now all the top sums are easy only, the tough ones are gone. So the moment I do nostro account in Forex, we are completely done. Okay, an Indian company has $1 lakh payable and $30,000, and people who joined late can watch the lectures that we already completed. Harsha, I am ready to give you a test, sweetheart. Tell me when do you want to give, and you please coordinate with me. The sheets for bonds and equity are ready with me. The day you tell me, I don't have to do anything, because see, for Hindi batch I have to prepare something new because I'm doing it for the first time maybe. But for you I don't have to do, because the sheet that I prepared for them can be used for your test also. I don't have to re-prepare it again. Okay, that way. So all the sheets are ready. Tell me when do you want to give. I can drop it on the, or maybe individually whenever you want to take. I will sit for the test and then tell me, ma'am, I'm done. I give you the step marked sheet also. You can calculate and tell me the marks. An Indian company has, what is netting, guys? The net, you will see in the example what is netting. An Indian company has a $1 lakh payable and $30,000 receivable from a UK company. If you see, three currencies are in the scene: rupee, dollar and pound. Okay, not a problem. I can take the whole. So let us finish then. Let us finish then. Yeah, not a problem. So keep revising till then. An Indian company has $1 lakh payable, and see, the Indian company will be exposed to rupee and dollar only. It has nothing to do with pound, even if it is a UK company, because it has to pay in dollars and receive in dollars. Are you fine? Similarly, the UK company is exposed to dollars, not to rupees, because it will receive and pay in dollars. Now the rates are given to you. This is 76.4, so this will become 74.6 and 75.10 if you remember at all. Okay, calculate the benefit of netting for the Indian and the UK company. Okay, now here look at this. Leave this part for the timing from Indian company point of view. But I need definitely rupee dollar rate cross currency calculation is done. Now for payable I will use this rate. For receivable, I will use this rate. So payable, see, look at this. This is the amount in rupee, and receivable, this is the amount in rupee, and you net it out. Okay. The net outflow in this case, it will be net outflow only, because $1 lakh is payable and $30,000 is receivable. So naturally, it will be net outflow. Okay. Now, what am I doing? It looks bad. Okay. Now with netting, so what do you do? With netting, you can net buy $70,000 at 53.64. What you pay is this one. Guys, it is nothing but the gap between the two rates, the spread loss that you are saving, nothing else. The spread loss that you are saving basically. So you are saving 65,000. If you try out at home, you'll see basically you are saving the spread, nothing else. Bid-ask spread. From UK company point of view, when $1 lakh comes, I will sell in the market to convert pounds. Okay, I will buy dollars and then I will pay. The net receivable is this much, and if you do with netting, what will happen? $70,000 net to be sold, and this again extra is this one. This is not an ICI sum at all. This is a sum which I've given from my own stock of questions. So what you did for leading and lagging, you did for netting, and one question of ICI is with respect to invoicing. Now you tell me, can I stop the lecture, because I feel I get now, kind of what do you say, yeah, थोड़ा सा over हो रहा है. ठीक है, तो can we do tomorrow 7 o'clock to maybe like something, maybe we can start a bit early, guys. Can we start 6:30 tomorrow? If I'm getting late, I will inform you on the group. Can I start 6:30? Because if we start at 6:30, we will be able to finish max by 9:30. Otherwise, it will go beyond 9:30. That is not good. So 9:30 is a dinner time. So all of you will be wounded up with the topic by 9:30. 6:30. Because I have a lecture of CFA tomorrow till 4:30. So if I start at 5 o'clock from Andheri, okay, and coming to Kandivali, it will take 1.5 hours because there's a lot of traffic nowadays. So it's okay. Let me keep some buffer with myself. Otherwise, you guys will have to wait unnecessary. I don't want to do that. Okay. Thank you so much. Bye bye, guys. Bye bye. Bye bye. And please watch that video of mine. Please comment. Please like. I've done a great job. I've given in writing actually. Okay. So please like that video.